Good afternoon traders, it's Simon at Kairos Capital Markets with the weekly review of Aussie dollar, pound yen and euro dollar. So last week we suggested that the US dollar would devalue itself over the course of this previous week, and it has done so quite nicely, breaking out of the upward sloping wedge pattern, or the rising wedge pattern, and coming down now to 94. Notice how Friday's candle is a bearish engulfing candle and stopping at 94, so I'm expecting this to continue a bit further down. And when you look at the weekly chart, you can see the tweezers here, and then a nice little breakdown afterwards. So I'm expecting another week of bearish sentiment and pressure. And what I would really expect now is for the 4-hour 50 to rise up a little bit, test this 4-hour 50 MA, and then break back down again quite nicely, heading down to 93.5. And when we come back to the daily chart, 93.5 does put us in by the daily 50 EMA roughly. So I do expect that to come into effect a little bit, and I do think there'll be some more dollar weakness to come along. If you look at the US dollar index from FXCM, you see a very, very similar story there. You can, where we're testing these previous highs here of this little mini head and shoulder pattern, and now obviously here as well we are just at the same situation there. And if you look at the weekly chart here as well, you've got tweezers and then another bearish week down afterwards. So I do really see on this chart here at least a pullback to 11900. And if we do our Fibonacci retracements, you can see that's at the Fibonacci 382. So that's a nice clean breathing cycle, and that's what I'll be looking for as a longer term trader. So how does that affect the other pairs we look at? So Aussie dollar itself, we did say 75 here would be outlined as being the key area. You have got room to breathe to get up to 75 now, which is quite nice. You've got doji or low tests, even tweezers as well now forming here. So I do like that. It's a nice bullish tweezer as well. That is, so it's a good strong bullish signal. When we come down to the lower time frame here on the daily chart, you can see already that we've had a nice breakout on the last day to the upside, which is very, very nice to see. And on the intraday chart, you can see the 4-hour 50 EMA has actually broken nicely, and this downward sloping trend line. We did come up and come back down to test this trend line. I never took this trade, by the way, guys. I took other Aussie pairs because it just presented slightly better value and everything else. And I took different dollar pairs as well. It took me different values. So there's nothing wrong with this trade whatsoever. It's just I wasn't interested too much. But what you can see now is that we've got 3 higher highs here. Well, these are 2 higher highs here. This is your higher low here, so we are trending in a bullish trend. I'm expecting a pullback to the 4-hour 50 EMA, because don't forget we've had a little move now. We have something like this, like that, pull back down. There's the 618, the 4-hour 50 EMA be there, and then head back up to this arrow here. That's what I'm expecting for roughly, and most likely up to 75. So that is my Aussie dollar prediction for this week. A move up, start heading towards 75 with a nice bullish trend forming here. Now, pound yen for me did break out this downward sloping trend line, but then it's trapped between the downward sloping trend line and the upward sloping trend line. So this area here, to me, is no man's land right now. There may be some trades to take every now and again, but for me, I don't like it. So I'm just going to draw in what I mean by this no man's land. And there you go. This kind of triangle here, this area here at the moment, for me, is just no man's land. I don't like it one bit. I'm not happy with it. And I wouldn't really want to make a long-term prediction. And when you come down to, or come up to the weekly chart, you can see why now. We've got 2 low tests at the bottom, and we started a bullish and got a bullish candle for ending last week. So a move back up to the upward sloping trend line would really be ideal, and I think that most likely will happen now due to the weekly chart. But just come back to the daily, you need to find your value here, and the problem you have is you're going to trade into, if you don't go long now, you are trading to the daily 50 EMA, which isn't the greatest trade to take whatsoever. If it rejects the daily 50 EMA and comes it down to test the trend line again, it's not the greatest trade. To be quite honest, the best trade here would be this. Price does move up, test the 147 area. It then comes back down and tests again 144.5. It does that. Now that would be interesting because you had a break and retest. You got a triple bottom plus a break and retest of this trend line, and also it means it's sliced through the daily 50 MA. It's ignored it, which gives you a lot more confidence. But this is obviously a wait and see. Now, if we then just head up to here like this, The problem you have is that then the weekly would look, most likely it'd be like a high test or something if you come up and test it and come back down. So the weekly will look bearish and the daily will look bullish again. So for me personally, I will sit out on pound yen now for the moment. There may be some short-term trades that some of the scalpers may like to use this one, but for me personally, on a medium to long-term ideas, you got mixed signals. The 4-hour 50 MA hasn't really trended. It's just, this is just a run up. It's not even a trend up at all. It may be trending the lower time frames on, say, the 15-minute chart, for example. If I just see what we've got on our chart first. So even in the hour chart, you just run at the 1 hour 50 EMA. So you know already that that's a key area. So that's just how I look at it anyway. But my problem is that that's just a run up. It's very, very messy. It's not going really too far. It's just grinding itself up slowly. So I'm not really, I said, interested in this pair whatsoever. So now euro dollar. And euro dollar last week, we did say 1.175 would be the ideal area it would go ahead up to, and we had a downward sloping trend line which we would target. And here we are. Let's have a look. There you are. There. This is your downward sloping trend line. Third touch there. Stopped perfectly there. It has. So what I liked about this trade was we had a nice bullish engulfing candle with decent volume to the upside there. So I actually did take this trade. I'm still in this trade here at the moment. I've left it open, guys, because I felt that, like, if this was a big bullish engulfing candle, but with low volume, I would have got out, no problem. But the fact it hasn't done that, and the candles decreased and the volumes decreased there, to me that's just quite literally normal, that is. And so I'm happy just to leave my trade open for the moment and still target the 1.2 area, which we had outlined last week as well. So when we now look at the weekly perspective here, you can see again that triple bottom from the daily chart. I put multiple low tests on the weekly chart there. A nice bullish engulfing candle to the upside, so you've got some good bullish pattern there and good structure to move up higher. I do feel that we would head up towards the 1.2 area. You can see the Fibonacci level of 0.5 is there, so maybe it'd be the weekly 50 MA at 382. We don't know exactly, but at least 1.19 now looks quite on the cards for this week. And when we come back to, sorry guys, the daily chart, 1.19. Well, I've got 1.185 on the daily chart there, and you can see 1.185 with the air. So 1.185 would be my next target for the US dollar. If you was to take it, I would wait for a break and retest of this downward sloping trend line. So something like this, and then come. See again, you do that, guys, and it comes up to 1.185 anyway. So that's your problem. You may find the breakout will come to 1.185. It could be classed as a fake out, and then crash back down again to the lows again. So for me personally, I would be skeptical of actually taking it like that. It may bounce. It may, guys, do this. It may do something like this. Reject here, come back down to there, and then power out to 1.185. That is what I think would most likely happen now. Like I said, I've got my trade open. I've left it open for the moment. I'm quite happy with it. So whatever happens, happens. It's a risk-free trade for me now. I won't lose no money on it. So that's the idea of trading. Any questions, guys? Just give us a shout. If not, have a nice weekend. Take care.